Welcome to this video on risk management trading for Forex, the stock market, futures, day trading, swing trading. Really, trading is a lot about risk management. Professional traders care more about money management and risk management than we do about indicators, candlestick patterns, support resistance, all that stuff that most people are looking at. What time interval should I be trading? Which is the best market? All that stuff. Sorry, not the most important thing. And what is most important is what most new traders completely ignore. New traders, I find, are obsessed with indicators. And indicators can be helpful. They can be a part of your trading toolbox. No problem there. I've got a great indicator, by the way, that helps you to time your entries and exits with amazing precision when used as part of an overall trading plan. And part of that trading plan must be, in fact, not only part, but at the center, I would say, at the hub of the wheel, must be your money management and your risk management for trading. So let me give you 3 examples of what I'm talking about. And some of you are going to leave this tutorial being a little discouraged. And this is definitely not a sales pitch. And you might even think, you know what, trading's even a lot harder than I thought it was. I already thought it was hard. And now I think it's harder. And if that's what you think, good, I've done my job. Because it is harder than you even think it is, most likely, for most of you anyway. Okay, so here's principle number 1. So let's say that you are trading a market. I'm just using round numbers here, and I'm going to use some round numbers throughout this just to make the math easy for you, just to illustrate certain principles. So let's say that you are in a market that's at $10, whatever that market might be. Okay, and it goes down to, and you're long, and it goes down to $5. So what have you lost? What percentage of your position have you lost? Well, you've lost 50% of your position, right? If you were in at $10, it goes down to $5. Now your position's worth $5. You've lost 50% of your money. Okay, so now how do you get back to even? Well, it's got to go back up to what? $10. Then you're at break even. So here's the tricky part though. It doesn't have to go up 50% in order for you to get break even. Now that it's down to $5, it actually has to double in price. So to get from here to here, the market actually has to go up 100%. So this is how things are kind of stacked against you. And that's really what this whole tutorial is about today, of how making money is harder than you even think it is, and with an emphasis on keeping your losses small and letting your winners run. You've heard that slogan. Well, I really want to emphasize to you how important it is to keep your losses small, because letting your losses move against you is absolutely devastating, more than you might even realize. So going down, you lose 50%. To gain that back, you've got to double the position, or you've got to double the price of the stock, Forex, futures, whatever you're in. So, wow, okay. And yes, the market is looking at percentages. The market is not as likely to go up 100% as it is to go down 50%. In fact, then you add the human dynamic in there that markets tend to go down faster than they go up. And many people attribute that to mass psychology, that fear is a stronger emotion than greed. So now, you know, we don't only have to fight the mathematics of it here, the percentages. Now we've also got to fight human nature to get that back up. And that's another factor that makes it even harder to get your money back. The second issue I want to share with you today is about unrealized losses. This is where people are in a position and it's still live. So you've got a position and it's gone down in value. You look at your P&L and it's negative, but you haven't sold the position yet. So therefore you haven't cashed in and balanced out your account. Now, a lot of people will say that those unrealized losses are, well, unrealized, which in a sense is true in the sense that you haven't sold your position and locked in the losses. But I think that there's a lot of people out there, in fact, I know for a fact that there are, who don't really think it's a loss until you sell your position. And that I totally disagree with. An unrealized loss is a loss right now. It is real, and I can't say it's realized, but it is real right now. fact, I even heard this in a podcast just yesterday. Heck, just yesterday it was, where sadly a host of a financial podcast was saying that even if your position is down, he was talking about currencies, as long as you don't sell, then you really haven't lost any money yet. And boy, do I disagree with that. Another place that you'll see this is with option traders, and they'll talk about, oh, hey, we're going to just repair this losing option position. And once we add this second leg or whatever, however they're going to repair it, then you're back to break even. And really? No. I've even raised my hand in classes where they've talked about these so-called option repair positions and confronted them saying, listen, I'm a futures day trader, and I can tell you when you're down, you are down. That money is not available to you. In fact, if you don't believe me, call your broker. Okay, you got these unrealized losses. Let's say that you've got again, let's just keep numbers simple here, $10,000 trading account, and it's down to $5,000 of unrealized losses. And you want to buy, another $5,000 worth of whatever. Your broker's going to say, nah, don't think so. And you'll say, but wait, I've got $10,000 in my account. And he'll say, no, you've got $5,000. And you'll say, no, I got $10,000 because I haven't cashed out. I haven't taken the losses on this $5,000 loss. And he's going to say, yeah. Can you say margin call? So that's how they look at it in the real world, because that is the real world, and that is real. Those losses are real right now, whether you've cashed out the position or not. The money is not there available to you. You've got to understand that. And so this is, I think, a false security that a lot of people have when they let their losses run instead of keeping their losses really, really tight and cutting their losses, is that they have this mindset that, well, it's not a real loss as long as I don't cash out the position. Wrong. Take that red P&L, in this case, the L, the red loss, very seriously. It is a loss right now in real time. That money is not available to you, and it is a loss. Okay, now let's finish up with a few other things, and this is, again, how important it is to avoid major losses and to cut your losses short. So first of all, remember, every time you take a trade, it's immediately a loser. Every time you take a trade, you are immediately in a losing position. Why? Well, a couple reasons. Number one, the spread between the bid and the ask. Number two, what else we got? Well, let's type it in here. We got commissions, right? We've got fees, exchange fees, broker fees, and so forth. So every time you enter a trade, bada bing, bada boom, you're in a losing position. Think of it almost like poker. We've got to ante up. So to play the game, you've got to pay these fees. All right, so immediately, even though if your P&L on your charting platform doesn't calculate this in, and it looks like, oh, I'm up a tick, I'm up 2 ticks, I'm up 3 ticks, yeah, but that may not include this. Now, some charting platforms allow you to calculate that in, and that's great. That's actually how I set mine up, because I want to keep myself aware of all of that. Okay, now, let's talk about your winnings. So you win, and that's great. So you made some money. Let's say that you made $100. Okay, no, you didn't. So why? Because, well, first of all, you got to pay taxes on that. So I'm in the largest tax bracket, okay? And so that's what, roughly, we'll just, again, use round numbers. People at different states and countries are watching this. So by the way, I am not a CPA or financial professional or tax professional, so don't take any of these numbers literally at all. Make sure you talk to your tax professional as to exactly how this is going to work out. But so roughly I pay about like 40% in federal tax. Then good old California, where I live, we've got our state taxes. So that's another, 10% or so. And then maybe you've got your self-employment tax. We won't even put that in there. But if we put that, so we're up to 40, we're up to 50, we're up to 60% that's being taken out. Then, maybe you've got spousal support, and maybe you've got child support. And pretty soon, what do you got left? Maybe 20%? Dang, right? And so now all of a sudden, you realize that your winners... you thought you made, let's say, $10, but you only made $2. Holy moly. And that's on the winners. And then our good old friend, the government, generally, they are very happy to take a percentage of our winners, but they don't really want to make much allowance for your losses. And so they will often limit the deductions that you can take on your losses. Again, talk to your tax professional about that. And each situation is different. People are in different tax brackets, how the tax is calculated, which taxes are calculated. All that will vary from person to person, situation to situation, whether you trade through a business or your personal account, countries, states, etc. So I just got to qualify all of that. But the point is, you can see the big point here. You think you made, again, we'll use the number $100 now, and no, you made 20. All right. So, or maybe you made 30, or maybe even made 50 after all of this. Still, what you think was a big winner was only half as big. So this is why it's so important to not only cut your losses, but let your winners run. Because your winner on your P&L, on your charting platform, that isn't what it is. That is not what you're putting in your pocket. This is the reality of what you're going to be putting in your pocket. It's going to be a lot less. Find out for yourself with your tax professional what actually will be for you as an individual. Okay, well, now that I've got you all motivated about trading, but again, you know, at least I'm transparent. At least I'm honest about this. This is the kind of stuff you need to really understand. That makes it even harder to make money. So what you do need is you need a good trading plan. You need something that's realistic in the trading world so you can make some real money. So if you like this video, if you found that it was helpful, if you think others could benefit from this as well, please understand that it's important to pay it forward and share that little button down there. Click that share button. It's really the best thing you can do. Also, if you're watching on YouTube and you want some more good stuff, please click the subscribe button. That way you'll be notified every time I release a new trading tutorial, which is about once a week. Click the thumbs up icon below and leave a comment. I love your comments. I also have a special offer to you today, which is one of my favorite trade strategies. This is a trade strategy that actually does have a very, very high win-loss ratio, which I think you can see how important that is now. And I can teach it to you in about 26 short minutes. This is one of the most simple trade strategies that I have. It's called the rubber band trade. And I'll give it to you absolutely free by clicking on the image in the top right corner of this video or in the description below the video. And if you're not watching on YouTube, there's probably a link below or an opt-in form on the side. Once you do one of those things, I'll personally email the video to you with the rubber band trade strategy.